G'day everyone, welcome to this weekend general update. And what a week it was. We had resolution in Washington and the markets absolutely loved it. Now, just before I start, I just want to go back 4 to 6 weeks to when I started the weekly video with the title, The Opportunity of a Decade. Well, it's happening. It's happening quietly in the background. There are strong trends continuing and there are new trends emerging. There are commentators that are still negative. There's some that have gone to 100% cash. I mean, there's always negative people out there, and there's certainly some negative events. We had the US government shut down. There's doom and gloom everywhere if you want to go and look for it. But you know what? Money's being made, and it's being made in lots of places. I also trade and track a whole raft of US stocks, a couple of hundred, and the trends in America are just amazing. This is the most exciting period that I've ever been in my 30 years in the market, and it's doubly so because the risk of any significant downside has been removed by the Fed. We've got the global economy, it's improving slowly, but make no mistake, the stock market gains we've had and those that are to come over the next couple of years are being driven by monetary stimulus. The Fed has got the capacity to print limitless amounts of dollars, and they're clearly signaled that they're intending to continue doing so. And with Janet Yellen just having been appointed as the Fed chairman, then that basically makes that absolutely assured. So inflating away America's debt is the only alternative that they have, and I think more and more people are going to start to recognize this. Now, this is all going to end very, very badly, and that's why it's critical that we get in now and make as much money as we can. You're just not going to see a better opportunity than this for a very, very long time indeed. So money is being made right now. I believe the Fed stimulus will actually accelerate. I think the chance of them reducing it is extremely low. If they do, I think interest rates will rise, markets will react very badly, and they'll have to pull the stimulus off again, pull the tapering off again. So I believe long term this is all going to end in a situation that will probably be worse than GFC, because circumstances in some ways are worse than they were in 2008. However, I also believe that that time is probably at least 2 to 3 years away and could even be 5 or 10 years away. Bill Gross, who runs the world's biggest bond fund, PIMCO, and he's an extremely well-respected guy, and he's talking about interest rates in America being held at less than 1% for the next 20 years. So if that's the case, they could keep this stock market going for some period of time. But look, the absolute sweet spot is right now. It started this year, 2013. It'll continue for the next couple, but after that, then, who knows. Now, there's still a lot of people that are incredibly negative about what's going on in China. This is a chart which I think just a picture tells 1,000 words. This is China's imports, oil in the black line and non-oil industrial commodities, so we're talking iron ore, copper, etc. in the blue line. As you can see, it's still increasing. There's been absolutely no slackening of the pace of China's rise in imports. So when you think about it, that has really significant ramifications for the Australian mining industry. And there's an awful lot of negativity out there at the moment, and there are companies that are significantly undervalued in the resources sector, and it will just take the market starting to appreciate that, and we can see some very significant gains. So that's another really exciting opportunity that hasn't really been playing out yet this year. Now let's look at the S&P. Had a huge week, up by 43 points, and look, the recent political charade in Washington over the budget and the debt ceiling, it was just all a farce. To me, the real game surrounds Janet Yellen, because she is even more towards money printing than Ben Bernanke ever has been. So that basically assures us that interest rates are going to remain low, there won't be any tapering, and it's my firm view that probably sometime next year we'll actually see them actually start to increase the amount. The ASX 200, it rose by 92 points on the week, and I would imagine there'll be more gains on Monday to go with what happened in the US market on Friday night. There were strong gains across the board, particularly Thursday and Friday. And we're also now seeing an increasing number of breakouts in speculative stocks. So that's a real sign that, some speculative money is coming back into the market. So let's have a quick look at those particular charts. The first one is the S&P 500. You can see we consolidated here for a while in a bit of a wedge pattern that really started around about August. We had a correction in August, we had another correction in September, and now we've just blasted away again and new all-time highs. Now, I reckon the way this is going to play out is as follows, and this is not a prediction because I'm not into that, but I do like to form a framework. I'm very happy to amend that framework at the drop of a hat, but I do like to formulate a framework which is based on the typical patterns in the market. So quite clearly what's happening here at the moment, we're getting a euphoric rally because the debt ceiling was pushed back now to February. I would expect the market might charge ahead for a few more weeks. It's quite likely then the market will get ahead of itself. We might then get a week or two of pullback. I would then expect the normal Christmas rally and into January to then really click into gear. So I think we can see the S&P above 1800 and possibly even pushing 1900 by January. But I reckon shortly after we get into the new year, people will start to fret again about the debt ceiling, which has not been resolved. It's just been pushed back to February. So I reckon we've got some really clear sailing from now till probably early to mid-January. I think there's probably a good chance there'll be a bit of a pullback from then. They'll resolve it again, and we'll then get another market charge into April or possibly even May. So I reckon that's how it's going to play out over the next few months. So very exciting times. Let's have a look at the Russell 2000 index, the small and mid caps. Even stronger than the S&P, as it has been pretty much all year. So a lot of strength in that market. If we turn to our index, we're only just above the highs of May, so we're still underperforming. But nevertheless, a pretty good week that we just had, and new medium-term highs up above 5,300 points. Now, gold ended up rising by $44 on the week. It's still not out of the woods yet. It's still in kind of a no man's land, but it did go up on the week. And there was just a tentative breakout from this downtrending channel that's been holding gold in a decline now for several months. So as I've been indicating over the last few weeks, we need gold to close above 1340 and then ideally above 1440. Let's have a look at the gold chart while we're here. So there's the chart of gold. You can see this very clear downtrending channel. The price of gold just poked its head above the top boundary of that channel on Thursday and managed to hold the gains on Friday. So what I'd be looking for is a close up above 1340 here. That would be certainly positive and would indicate that the price is moving out of that channel. But ultimately we want to see it close above 1440. So if we can form a new high above the level of the 28th of August, then I think we're back into uptrend on gold. Let's just have a look at the GDX index. Stocks also in a bit of a decline, probably slightly outperforming gold, but no real signs yet that they're going to be heading up. So we're still in the waiting game with gold and gold stocks. Now, copper steady at $3.27 for the week, so that's always a good bellwether of economic activity around the world. Oil's lost another dollar down to 101, but it's been holding in this pretty tight range between 100 and 110 now for some time. There's the copper chart, so you can see it's really been in this 320 to 330 range now since about the middle of August. So just to finish off in terms of the way that you should be looking at the market at the moment, as I said at the start, the opportunities are just incredible. Everything is in place for stocks to continue soaring, but one has to be selective. If you look across the Australian market, there are minor sections of the market that are doing really well. There are large sections of the market that are not, that are either going down or going sideways. And just in the last week, we've actually had a couple of companies that have been performing really well long term come out with some pretty ordinary quarterly updates on their trading and really quite a negative outlook for 2014. So it's still a market to be careful in because long-term good stocks are running into some difficulties. So this is not a market where everything's going to go up. You do need to be pretty selective about it. Now, there are extremely high probability patterns that are working right now. I've mentioned those over the last several weeks. They're working an absolute treat. And from my perspective, where we're sitting right now, with the process that I'm using, that three-step process of identifying the best fundamental performers in the market, putting a realistic valuation on them, and then using technical charting techniques, it just doesn't get any better than this. And as I said, the main reason is because the Fed has pretty much removed that downside risk from the really good stocks. Stocks that are underperforming, they'll still get smacked, and they'll still get smacked very hard. But terrific opportunities, very exciting period. So if you are still sitting on the sidelines, or if you are still struggling with things that you've done that maybe aren't working all that well, then please get in touch with me. The Fed, if you like, is our trading buddy for the next couple of years. And I just think now's the opportunity where you can get in and really make some serious money. That's my contact details if anyone would like to do so, and look forward to sharing with you again next weekend. Cheers.